Welcome to the Minds and Money Online Connect Virtual Mining Conference. I'm Niels Christensen, an editor with KITCO News. And thank you very much for joining this fireside chat with Frank Holmes, CEO of US Global Investors. Just before we begin, this is a fireside chat, but if anybody in the audience has any questions, please type it in the Q&A section in the chat there. Frank, it's a pleasure to talk with you. It's always a pleasure to talk with you. So much to talk about. It's been a wild year for the gold, and it's only half. We're only halfway through. It's been a wild first half for the gold market. We see prices near their highest level in 8 years. We're dealing with COVID-19 pandemic. We're dealing with so many different issues. Environmental, social governance issues is cropping up, and with higher gold prices, we're seeing great margins and cash flow from miners. Thanks for taking the time to talk with us.
It was great to be with you from San Antonio, Texas.
Fantastic. So let's start. I think this is the big one. COVID-19. This pandemic has devastated people's lives. It's destroyed the global economy. And it had, and the mining sector hasn't been left unscathed. What are your thoughts on the impact this pandemic has had on the mining sector?
Well, I think supply lines, if we take a look at supply lines for any movement of any major products around the world, they were totally disrupted. They're starting to get back to life, but it's not over. And I think that just like classic, I'm filming today with you, connecting from home, but last week I was in the office. San Antonio's had a surge. All of a sudden there's another re-lockdown. People can't go to the office, but we've got all their old procedures managing the business. So it's very disruptive that way. But the most classic way is to take a look at the airline industry. And there's some positive and negatives. But I think the biggest negative for gold investors is the audience. The median age of people dying is 82. So a lot of gold investors are in their 60s going up to 80. If they have any other complications, they're passing away. I think that's been extremely disruptive when you see investors from that investing world. Mm-hmm. On a positive note, there's been an incredible avalanche of new millennial investors, which we've experienced in our JETS ETF, particularly through Robinhood, which allows it to be public. 40,000 retail investors came into our JETS ETF and during this pandemic, which is really unprecedented. And we had 70 days of flows of $1.5 billion. Wow. So what's interesting about Robinhood is on their toolbar, they're the only online brokerage firm that has gold as an asset class. And you can see, looking at the GLD, gold rising and more millennial investors buying the GLD and also buying, I know, our GoAU ETF being listed on New York. We're seeing a huge increase in the number. But I really get back, what can happen in this gold market is just a huge number of young investors coming in to play in this arena, and they're more speculative. So that's another sort of positive part for junior mining, anything that's sort of that's emerging. So the gold industry will sort of replenish itself with new investors.
Do you think the impact that we're seeing in COVID? I mean, does it last? Is this going to ripple through the industry for years, or do you think that we could get a quicker recovery? Maybe not V-shape, but the sector can sort of go back to normal in a couple of years.
Yeah, I definitely think that. There's people that believe it's a V economy, a U economy shape, and then there's the W. I think which Warren Buffett is advocated that he thinks it's going to take place. But we have to remember that Warren Buffett, the brilliant investor and wise man, is turning 90 in August. So he's very, very sensitive over age and catching the coronavirus. But he's also been so seriously wrong on gold. Gold since the beginning of this century, since 2000, has been up 80% of the time.
Mhm.
Gold bullion has outperformed the S&P 500 by 2 to 1, and gold bullion has outperformed Berkshire Hathaway, not only year to date, but for the past 20 years. So I think that not only did he miss the Google and the Amazons, he clearly has missed gold. And one of my favorite royalty companies for the past decade, when it re-emerged, was Franco-Nevada, when it was spun out of Newmont. It's more than doubled the performance of Berkshire Hathaway. So I think that gold is a very important investment, bullion and owning gold shares, quality gold shares.
Well, I mean, let's just talk about the gold price for a minute. I mean, we just finished Q2. We just finished the first half. Best quarter for gold in 4 years. Prices are pushing their highest level in 8 years, $1,800 an ounce. Does this forgive a lot for the COVID stuff? Like miners shut down for 3 months. Does the higher price in this uptrend sort of make up for that lost period?
That's a great question. I know that there was a webcast that was done during the middle of the pandemic shutdown with CEOs and one-on-ones, and they all basically articulated that yes, it was disruptive, but their production, but the higher gold prices offset that. Those numbers that came out this quarter showed it. What's really positive for gold stock investors is that this operative word called free cash flow. And so many of these CEOs on dumb mergers and fundings that didn't work out just destroyed that. And we had a long period of negative free cash flow, whereas the S&P 500 had free cash flow yields of 2.5%. And the generalists, which is a much bigger audience of capital than gold fund managers, they are attracted to any industry that they deem as being sustainable in free cash flow. So what did you see this year? Well, the coronavirus disrupted the S&P 500's free cash flow. It went negative, but not the gold. If we look at the end of December, it was basically flat or minus 50 basis points when I look at the 100 global gold producers. Now they turned positive this past quarter. And so now all of a sudden you're seeing more interest going into gold stocks. And in particular, since the mid of March, I think our ETF's up close to 100%. And that's just giving you an idea that people are attracted. We focus on free cash flow. And Barrick and Newmont were on a tear also. And they, in all their presentations since the beginning of this year, are loud and clear that they have free cash flow for the ability to pay more dividends and higher dividends. So I think that we're going to go into a very nice run here for the next 3 to 5 years, where gold stocks are going to outshine a lot of the S&P 500.
Just actually, this is a good point. We have a question from the audience here. What gold mining companies do you like? Obviously, you mentioned Franco-Nevada. You do like royalty streamers. Are there names that you like to share? And part of that is you use a quant strategy, and part of that involves free cash flow. Is that what investors should be looking at? Is how much cash these miners are generating? So a couple questions there.
Yeah, I think the biggest part is to recognize that 90% of the trading in day out are quant-based fund managers. And the new operative word is called quantamentals. And a lot of them go for various stock screens, and they go and back test them, and they find what's reliable for up and down cycles. So we know that if you just pick the 10 stocks that had the highest revenue of last quarter over 4 quarters, and that's all you bought, 10 names. Now, you can't build a mutual fund around those because you have to have at least 21 names. But you can say in a private account, and you just rebalance them. You far outperformed any gold equity ETF for both. So there's a lot of significance on owning these stocks that have free cash flow. If you went for just the 10 stocks that have the highest cash flow return on invested capital, same thing, you far outperform. So what we've identified, there's 5 very strong factors that attract the generalists. And the generalists are the ones that will go to any industry, and there's a much bigger pool of capital. So it doesn't matter if their market caps are 50 million or $1 billion, if they're offering certain factors, they have a higher probability of outperforming. Now, a lot of gold analysts like to forecast growth in production, etc. But Barry Cooper years ago showed they're so wrong. It's just Mother Nature's problems, geopolitical tensions, whatever there is, they seldom hit that production that they're suggesting they could do. It's better to follow momentum. So if the revenue last quarter is above 4 quarters and the cash flow this quarter is above 4 quarters, mathematically, odds favor that if gold is flat or rising, they will continue to do this. They outperform.
So do you have some names that you like? Is there like would you want to mention them? I guess it's okay if you don't. But
name, sure. Like I would say, one of the stocks that we really like is Grand Columbia, which has the highest cash flow returns on invested capital. And management over 3 years ago owed $45 million of creditors, and today they have almost $175 million of cash in the bank.
Wow.
Their cash flow from revenue from last quarter is above 4 quarters. They're taking on the model of which you see South African mining house companies did when they develop a new mine. They create a new public company and they de-risk the holding company. And so all of a sudden, to build Vermato, they securitized that. So Wheaton River gave them a gold note, not a gold royalty, and they'll have another mechanism to develop that operation. So I think companies like that. Kirkland Lake was one of those stocks that if you looked at revenue growth on a per share basis, it made Eric Sprott $1 billion because the market was sloppy, but it continued to have growth in revenue and cash flow and free cash flow. The Newmonts and Barracks, they have free cash flow. Yamana has free cash flow. They articulate about having free cash flow. So I think that's the real important operative word.
Okay, so we have a little bit of time here. I wanted to ask you, I mean, and you mentioned this, so US Global Investors has an ETF, Go Gold, GOAU. And you said it's pretty much doubled since March. Do you think there's room to go higher? Like, is investment demand still, like, is it going to be strong, do you think?
Well, if you're bullish on gold and management and these CEOs don't do dumb acquisitions and they protect those value factors on a per share basis, I think gold stocks trade substantially higher. This is a great secular bull market for gold mining companies. And then we have peak gold and the supply of gold. And like I mentioned earlier this year, that gold could go to 10,000. Why not, when we look at palladium, as supply was contracting for 3 years, and all of a sudden, out of nowhere, last year it goes from 1,000 to almost 3,000. The run, the momentum, until the coronavirus comes along. So I'm very bullish about them. But the bigger part is management really, and the boards of directors don't listen to deals where let's put our two companies together. We'll have a bigger top line and bigger cash flow, but we'll destroy the value metrics per share. Those stocks languish. So any merger that's not accretive on a per share basis, stay away from. But I think there's better buy-in for that. But let's talk about gold. We looked at the last cycle, 2008, 2009. And during that crisis, we saw the Federal Reserve increase their balance sheet from $1 to $3 trillion. And we saw the money printing presses all of a sudden take off. We also saw the G20 finance ministers around the world and central bankers became a cartel. And they are synchronized about tax and regulation. And now it's all pivoted towards fighting the coronavirus pandemic. And that means throwing every monetary and fiscal policy they can at it. So if they all collectively talk to each other, then they can all help each other out this borrowing binge. So what's happened in this cycle? I said that the cycle is going to take about $10 trillion for the US alone to really get the economy going back. And I think it's 7 trillion now to date. So what does that mean? Well, if you look at what gold did last cycle in 2000, 2009, 2008, 9, it went from between $700 and $800 movement up to 1900. If we forecast that same growth in balance sheet and debt, and we're talking about $4,000 in the next 3 years. I don't know when, but mathematically, these cycles are not exactly the same. And naturally, past performance is not a guarantee of future results, but those patterns are important to see and to give a probability analysis. Look what happened with the airlines. So this will give a great trivia for you. When the airline industry shut down in mid-March, the busiest airport in the world became Anchorage.
Wow.
Medical supplies, Asia to North America and to Europe. What did it do to the price of gold? Well, a lot of bullion, physical bullion, moves around in the belly of commercial airlines. All of a sudden, they're not flying to England. And now you have to get a private jet to get that bullion moved from New York City to the UK. And that cost went from $30,000 to $300,000. That immediately transpired into a premium of $135 an ounce per movement of physical gold. So these supply lines have been disrupted. They're still easy. It's not totally turned around. So I think the element of physical gold, when we get where the airlines are now flying again, the low is in mid-April when the TSA came out with a new metric in mid-March, and they started publishing how many people they screen a day. And it's a great tool because in mid-April, it fell to less than 90,000 people a day. Now it's through 600,000. Wow. So the airlines had the first big run up of over 40%. Now they corrected, lots of financings for them, and they're going to get for the next leg. But I think what's happened, and then we saw the premium on gold dip. So the airline industry is an important sort of factor of taking a look at flow of people, flow of economy, and now you can use how many TSA are pre-clearing. And I'm seeing that more analysts are using Google Trends to take a look at how many people look up the price of gold last week. It's a precursor to gold trading higher next week. And so they're doing that for airlines and travel. Open Table gives you data on all the people booking to go out. And you can put a moving average like your subscribers do on KITCO of looking at the price of gold. It was so important as the trend, and the trend is your friend. They're now looking at flight travel, restaurant bookings, etc. And we have new dynamics. So the quant funds are very important of moving into this space.
Frank, thank you so much. I didn't even get through half my questions, I think, and we had lots of participation online, so we didn't get half those questions. But I wanted to thank you very much for your time. Your insights are fantastic, and I think the advice of looking at free cash flow is a fantastic tool. So thank you very much for your time.